Thanks for listening to Investor Insights, a behind-the-scenes look at investing with Fund That Flip. This series provides an insider's look at how our business works and answers your frequently asked questions so that you can make better investment decisions with your hard-earned capital. Now, our founder and CEO, Matt Rodak.
Welcome to this episode of Fund That Flip's Investor Insights. I'm your host, Matt Rodak, founder and CEO over here at Fund That Flip. And on this week's show, we have John Andrews back. He is our Senior Vice President of Sales and Service. And we're going to be jumping into one of deals that we recently funded. But first, if you missed episode 3, check it out. We had John on previously where he gave us a bit more about his background and what he does here for Fund That Flip. So check that out. Today, we're gonna really dive in deeply into one of our projects. So with that, welcome to the show, John.
Thanks, Matt. Appreciate it.
Good to have you back. So let's jump into it. What deal are we talking about first here on the site? This is one that people can invest in currently, right?
That's correct, Matt. It's a deal that's open for investment currently. It's a property located at 314 Degraw in Brooklyn, over there in the Cobble Hill neighborhood. So it's one that I actually had the opportunity to walk just last week and spend some time with the sponsor on not only this project, but some other things that we're doing with him and potentially might do with him. So it's a great location. It's a really interesting property.
So tell us a little bit, maybe let's start with the borrower. Tell us a little bit about the borrower. How did he find us? Kind of what's his background? What's he up to?
Yeah, so the borrower has been a real estate broker in Brooklyn in the boroughs for many years. His wife, who's involved in the business, is a former banker, worked at all the big banks on Wall Street, and as the sponsor's kind of career as a real estate broker took off, he got into the development side of things, and we got to this borrower, Matt. He actually came to us through another investor who we were doing a deal with, and this borrower was a JV partner on that deal and the acting real estate broker. So we've actually done business with him before, and as he's continued to kind of look at various projects on his own, he circled back with us with this one, the Degraw property.
Got it. So some previous experience with this borrower. We've gotten to know him over a bit of time. A little bit of experience in financial services between him and his wife. How did they? Do we know how they kind of came across this property? How they acquired it?
Yeah, absolutely. So kind of a unique story there in that our sponsor, as I said, is an active broker. So he is looking kind of all day, every day at properties and networking with fellow brokers. Came across this one and immediately thought that it was just kind of a normal opportunity for someone to buy at market, and decided because he loved the neighborhood so much, and actually he and his wife are looking to purchase in that neighborhood for their residents, he decided to go check the property out, and upon walking in, realized that it was much larger than all of the other properties on that street. So if you were to Google map this, or if you look at the appraisal here, you can see the aerial view. There's a very large extension off the back of this property. So upon walking the property, our sponsor kind of asked the seller, about that extension, and it was unclear as to whether or not that was a legal extension. So our sponsor did a little bit of research, found out that it was grandfathered in and was able to remain. He wouldn't have to tear it down. It was good to go. And so immediately knew that he had on his hands a 3-family unit in terms of each of the 4 units, as opposed to what would be kind of normally a tight 2-family, a very typical Brooklyn property. He recognized right away that he had the opportunity to have a much larger property, and it was priced just like the kind of smaller units on the street, because the seller didn't realize kind of the premium that space, the additional square footage was there created. So he bought it from that seller. That was how he found this one.
And is that extension, I'm looking at it now on the maps, is that extension all 3 levels, or I guess all 4 levels, including kind of the semi-basement level?
So the semi-basement level, I don't know that has the full extension. So I was actually in that basement last week, Matt, and he's doing the demo in there. So the back portion of that was actually blocked off from view, and it looked like they had a pretty serious amount of work there. But I know that extension exists on the upper levels. So even if you have one of them that's smaller, the kind of above ground, not garden unit, kind of basement unit would be the bigger version.
So got a great deal primarily because someone actually went through in New York the correct process of getting an extension permitted into the back, and now is grandfathered in, so he can have a lot of square footage here for a finished product. So maybe let's talk a little bit. You mentioned I think a little bit about the neighborhood, and our particular borrower likes this neighborhood. Let's talk a little bit about this neighborhood for those that aren't maybe as familiar with the greater New York City and specifically Brooklyn area.
Yeah, Matt. So he's less than 1 mile from 3 subway stations. So he's got 3 train stops nearby. He's less than half a mile from 2 of them. So you're talking about a matter of 3 or 4 blocks. He's right off of. He's almost on the corner of Court Street. There's one property between him and Court Street, which is just chock full of kind of new restaurants. Very much part of that Brooklyn that has already gentrified. As I walked the street last week, I couldn't help but notice the amount of strollers. I think there's also three parks nearby, so a lot of young families. I would say that I actually have a close personal friend that lives not too far from there, and it's where he's at is much more kind of young people, young professional, and maybe commuting into the city. This neighborhood's very family oriented, so it still I think has that location that professionals in Brooklyn desire from the standpoint of access to Manhattan, but it also has that neighborhood feel. A lot of bars and restaurants, but also you still got some green space nearby with 3 parks and very kind of family friendly, much bigger kind of buildings there and units. I think so. Your renters are not going to be the single guy or gal that's working in the city or a group of young people. Like, this is going to be kind of a neighborhood where you would potentially have children or a growing family. So yeah, that Cobble Hill neighborhood is a very desirable one in Brooklyn.
Yeah, so this is kind of like right on the line between Cobble Hill and Carroll Gardens, which are two nice neighborhoods. I had a friend live over in Carroll Gardens as well. It's you mentioned Court Street. The other side of the other block that he's in between is Smith Street, which also has a ton of kind of bars and restaurants and a lot to do. So speaking personally, this is one of my favorite neighborhoods.
Yeah, this is what you see kind of in the movies, with just the brownstones for as far as you can see, and then the coffee shops and outdoor seating bars on the corner. So this was we had lunch with the borrower there, and was really enjoyable. It was a neat little street and kind of cool area that he's operating in. Close to
the Royal Palm Shuffleboard as well, a hot spot in Brooklyn.
Yeah.
So you mentioned kind of the type of person that's going to live there. Families. You mentioned tenants. These are going to be condos, right? Is the expectation these are going to sell for four different people that are going to live in the property?
That's correct. He's going to. It's an extensive rehab. He was in the process of the full demolition when I was there. But the plan here would be to have an access point for each of the 4 units, separate from one another, and for each of them to trade as their own unit.
And they're each going to have 3 beds.
That's correct.
Oh, okay, cool. So what's kind of our feel on the outsell? How did we get to the valuation?
Yeah, so Matt, we use the comparable data set of other condos that have traded in the area, and in the aggregate outsell here, we had kind of parked our number, our final valuation sub 8 million. The appraiser had it north of 8 million across all 4 of the units. So again, taking a little bit of a conservative approach here for our underwriting purposes, and making sure that the deal models out with the proper profit margin, as well as kind of the proper loan to value kind of calculation that we're looking at. So our valuation, again, sub 8 million, the appraiser is just north of 8 million. And that's an aggregate of all 4 units. I think the other thing to note here in our loan amount, we've actually got over $200,000 that's earmarked for interest reserve. So there's a decent chunk, a decent percentage of our total loan amount that we've held back to help the borrower kind of debt service this project. So again, I think an additional layer of safety there as the lender, not only taking a conservative approach on a loan to value basis, but also making sure that we've got kind of the proper reserves there for him not only to complete the project but to service the debt. Provides us a little bit of a cushion as we look at kind of being into the project versus what it's worth and what it'll be worth in future state.
So let's talk a little bit about that, right? So we've got 228,000 or so held back as prepaid interest. Is that for the entire term of the loan? Maybe talk to us a little bit about how long do we think the project's going to take for, it sounds like he's doing demo now, and then the rehab, and then the list and sale up. Like, is this a 12-month project, or do we think it goes maybe a little bit longer?
So I think the 12-month project would be something where, he would everything would go perfectly according to plan. So I don't think it's insane to think that it would take 12 months. He is, after all, kind of working through the demo as we speak, and once you get that done and you get the crews in there to start working, it can happen pretty quick. At the same time, I think we've done enough of these to know, and especially in an old building, you kind of never know what you're going to run into. There could be a surprise. So while he does have the 12 months, we've built in the option for him to have an extension should he need it. Obviously, there'd be a little cost associated with that for him, but to be able to extend gives us the ability to have some insight on how he's performing and work advancing, and make sure that everything is happening as we assumed that it would and as we planned for. And so long as that's the case and he's current, he would have the extension option. This probably takes somewhere in the 12 to 18 months range, kind of all said and done, from the rehab being complete, the renovation in its final form, and then getting these things listed and sold. And you had asked Matt about the interest reserve, the interest holdback. So that could very well represent the duration of the project. It's also possible that he goes over that a little bit. As we look at releasing the construction funds that are held back, we'll allow him, as a method of being kind of friendly to the investor, to the sponsor here, and also kind of just good business practice. We're not going to charge him interest on the full freight, full construction kind of holdback number, because there's going to be a period of time where he's not using a large portion of that. So we'll kind of allow him to draw down on that like a true construction loan. And we'll calculate the interest on a monthly basis as his total outstanding balance moves, and charge him interest accordingly. So that 200 to 220,000 that's held back should cover the entire duration of the note. But if it doesn't, he'd be looking at a small increase. He'd be looking at a monthly payment for a small portion of time until he's repaid.
Got it. So all in all, we got a $4.2 million loan on a property that we think across all 4 condo units is worth somewhere between, call it 7.5 and 8.1 million, which kind of puts it at a 51 to 56% LTV perspective. What about from an LTC perspective? How are we financing have we broken that out from a percentage that we financed at close versus how much are we going to be financing on the rehab piece?
So Matt, the first thing we looked at was the advance relative to the purchase price. So the borrower purchased it for $3.1 million, and we advanced 2.4. So we advanced about 77% of the purchase price. And then when we look at the total scope of the construction related to the renovation, it's about $1.5 million, and we're doing $1.46 million of that. So we're 1.46 into something that he's going to be 1.5 into from a construction perspective. So we're about 97%, a little over 97% of the total cost of the construction. What I like about that is we know that we've allocated funds to see this project through to completion. And as we do our periodic inspections, of the work that's complete. We've kind of got a good metric, a good system in place for monitoring that construction progress and dispersing against it. And we know that we've got, the vast majority, almost 100% of that construction money accounted for. So the borrower shouldn't have any kind of issue coming up with the money there at the end, like we know that occasionally a sponsor gets into a transaction like this runs into. And then I think most importantly is we've maintained that sub 80% total loan to cost ratio that we really strive for. In this case, we're about 77% of the total loan to cost on this project. So, or I'm sorry, that's the purchase price. So that's
79, just under 80.
79, yeah, just under 80. Total cost. The total cost of the project, Matt, being 4.9 million, and we're into it for 3.9. So we're just under 80%. We're 79% here of the total loan to cost on the project, which is what we really look for when we do these types of deals.
Yeah. So one of the things that I like about this project specifically is the amount of equity that the borrower is coming to the table with on day one. Right. One, we believe the property is a good property and is being purchased at a good price. But our borrowers got $730K into it on day one, right? And our sponsor and sponsorship group. So, from a how we think about of making sure that our capital, our loan, stays under the value of the property at the different points of the project. We're starting from a very good perspective on this one, or a very good entry point, I guess, if you will. And then, yeah, as you said, we're going to be out doing inspections, seeing how the work progresses, and then advancing capital into that work, as opposed to putting the capital out before the work gets done, which I think is something that if you're investing on our platform or really any other platform or doing any kind of real estate lending, that's really the key, is making sure that value is being added to the property prior to, your capital going into the property, just to make sure that your loan to value ratios don't get upside down. All right, cool. So what else? Anything else that you think listeners should know about this specific project?
Matt, I don't think there's anything about this property. I think we've kind of hit on it. The extension there and the size of the property, allowing it for it to be a 3-bedroom unit in a neighborhood that's very family friendly, I think is crucial. What I can share is having spent half a day with him and walking another property that he recently finished and has on the market, and I think a unit sold already. He really did a nice job. I was very impressed with kind of what he had put into that property and his considerations that he gave to how he wanted to have it laid out and what sells. So this one was this one was the one that he had told us he'd actually Matt, he had another property lined up to do with us at Fund That Flip, and ended up passing on it because this opportunity came up, and he was just he said that this was too good to pass up. So this is the one that he settled on, and this is the one that he's spending his time on currently. So it was really enjoyable to get to see this in its current state and kind of going through demo. And I look forward to getting back there over the coming months and seeing him get this thing to completion.
Yeah, this is a very cool project. Nice job on getting it booked. If you're listening, check it out. Again, it's 314 Degraw in Brooklyn. It is open for investment, and we'll be funding construction draws on it as the project progresses here over the next year or so. I think that's it. It's a wrap. So appreciate you guys listening. John, appreciate you coming by and sharing some more specifics on this particular project. For more info about how to intelligently invest into real estate, check out our blog at fundthatflip.com, and look forward to having you stop in next time and learn more about how we operate here at Fund That Flip. This is Matt signing off.